All right. Is this thing on? Welcome, guys. Welcome to CryptoEMC. My name is Rudo, also known as the chart artist. And with me, I've got the hand pointing in the right direction now. With me is my trade buddy, Fibonacci Lee. How are you doing, my friend?
I'm good, and you?
I'm great. Okay, so, well, we'll see. We'll see. We've tried something. We're going to try and see if we can simplify the FOMC meeting for you guys in a way that everybody can walk away with what it is that they actually need to think of. We're going to be taking that information and we want to then apply that to look at Bitcoin, Ethereum, some of the big alts, big picture, because it's important to try and read between the lines of what happened after the meeting, what the market was doing as well. So we're going to be looking at a lot of these different facets of the market and to try and get a picture that's going to best paint what we should be doing going forward. Okay, so Lee, yes, people are already saying me being on the right is confusing them a lot. So, okay, so we've got the intro done. So I'll just swap us around and say, okay, right, I'm back at my normal seat and my right-hand man, which is on the right-hand side of the screen, is here with you. All right, guys, so let's get into it. So the FOMC was negatively, the FOMC report was negatively received. And why is that? So we're going to try and read between the lines today. And this is probably the biggest takeaway that I can find out of it. The Fed did not raise the rates. And this should worry us. It tells us something that there's more happening behind the scenes than that we know. Or the picture is not painted in its true color at this stage. Now, the markets were calling for a big take action. The Fed released minutes of what they were going to try and achieve or discuss prior to the meeting. And the markets did not respond well to the end result of it. And we saw that by means of the way that the market started dumping when they heard news that they didn't like. Okay, so this is warning signs for us that there can be worse things to come. But remember, we're in the crypto space, so let's not get too caught up too much. We need to understand what's happening there, but let's not get caught up too much. The end of the day, Lee, we all know that, news and these things happen, but TA is kind of always up to date now, printing how everybody's feeling. Hence the big birth of that big saying, show me the charts and I will tell you the news. Okay, so the new Fed policy is to hunker down or on the taper. So they want to slow down the economy. Now, why do one want to achieve that? Why would you want to slow down growth in the economy? Well, simply put, if there's bad news to a volatile economy is going to create an insane rupture. And if they want to try and prevent us panic selling or overreacting to bad news in the future, this would be a good way to do that. Now, why the dump? So we looked at the original minutes, and the market was expecting the QE, quantitative easing, the way of them printing money, to start going down to zero or at zero, meaning no new money entering the markets, entering the economy. And they were also expecting interest rates, meaning less incentive for public to take out loans. It's bad for those that are already in loans because the interest rate, if it's not pegged, will be going up. What the market didn't expect was quantitative tightening. Now, this is a completely different dynamic. Instead of the government printing money and throwing that money into the economy, the government's doing the opposite and saying, well, everything that we bought and what we own, we're going to start selling that. So if you think about it, to try and put it in its simplest way possible, the government owns the country, i.e. you pay rates and taxes. And they do it through the bonds and through the treasury and so forth. And if they start selling that back to the public or back into the market, you need to think about that and say to yourself, well, what's wrong? And that's basically what they're trying to do. So what does this mean for the repo rate? Well, if you think about the repo rate, if that starts spiking up, it normally means that the economy is due for an insane or experiencing an insane lack of confidence within the country's ability to pay back their loans. Now, with quantitative tightening, what is happening now is they're going to reduce the collateral with, let's stop it there, with the interest rates going up into the future. Because remember, what they're going to do is they're not increasing the interest rate now, but they will be increasing the interest rate later. So remember, we said they're slowing down because they want to prepare us for bad news. So with that being said, there's 3 more interest rate hikes most probably going to be happening in 2022. So going now and taking this and taking it to the repo rate, people's ability to not afford their debt. If they reduce the collateral by increasing the interest rates, what it basically means is if you were to want to go get a credit card or your business needs an overdraft, you're going to have to give more collateral, more assets to back your debt. Now, for the general public, that's going to make it more expensive. You need to own more in order to get a loan. But what they're also doing at this stage is with the quantitative tightening, they are reducing the bank's ability to give you cash because there's no more QE. The government is basically actually exiting their own position and they're leaving the economy to deal with the pressure. And that is a scary thought that I would want to leave with you. So, Lee, I'm going to use you as my measuring stick. What do you understand and what don't you understand? So that we can make sure that everybody grasps this thought as before we go and look into Bitcoin going forward.
I understand indecision in the market. I mean, your interpretation of this is pretty scary. If we look at only at the first level, knowing that government is selling their bonds or quitting their position, is that if they don't have confidence in their politics or whatever, how do you expect us, the public, to have confidence? So it will create a kind of panic. But opportunity is made and money is made when the market is in panic or when we have the crisis time, right? So if they want to create a panic and make the public sell, who is going to buy those shares when the market dumped? The whales.
Yes.
People's got money. People who's got already a lot of USDT in their wallet. And we can see that with our USDT dominance chart. When they stable up, is to prepare for buying cheaper and buying the next opportunity. So I would interpret it that way. I mean, it is a scary news because they don't know what to do. They basically yesterday there's no report. They had a drink together and they say, "Oh, let's push it to March." What are we gonna do in March? No one knows now. But yeah, no one knows. But yeah, I mean, prepare if you have USDT, that's the best position, and that's logic. The chart is telling us to sell, stable up. From the top, I mean, we have seen weakness, and the USDT chart now is almost like at the top. So people are ready to deploy the stablecoin and the US dollars again.
Okay, Lee. So the big thing that we want to try and put, and maybe let's not get such a somber note here. Let's brighten up a little bit of background. Is that we want to be buying when there's blood in the streets. We just want to make sure that they've stopped shooting. We don't want to be there buying the dip and then being part of the guys being slaughtered. So we just need to make sure that happens. Okay, so one thing that we then want to do is we want to be looking at obviously our Bitcoin, because the thought pattern behind this is if money is leaving and money is leaving confidence, we need to start looking for traces for where that money can go. Wealth is smart. Wealth is there because it outsmarts the general public. So if we can find out little clues and subtle areas where that is, one of them would be the Bitcoin futures. Now, everybody's saying, yeah, futures are going up. But the reality is, and please excuse me or correct me in the comments if I get this wrong, but for there to be, for institutions to own Bitcoin, realistically, they count because there's no ETF on it. They can own future contracts. They can buy paper Bitcoin. So they can bring economy to the Bitcoin, to the crypto markets. but they can't really walk away with any of it because it's all paper. It's like owning paper gold. It allows you to speculate and transfer the stored wealth of that gold without actually owning the gold. So that is our biggest tell that money might be moving into this, is if that keeps on going up. And at this stage, Lee, do you have something for us, or should I wait a little bit later before we look at that specific chart?
Yeah, we can look at the feature charts later. But
okay. So, and another way that I used to use to do just that is when I look at the seismometer and or our seismogram, because the seismogram's job is to do just that. I'm going to bring it up to the screen. The seismogram's job is basically to show us when there is buying of a nature that gets hidden from the general public, when they're gobbling up absorption. So the seismogram at some stage yesterday was running quite high. And at the moment, if we look at it, it is running it's starting to fall back below the red level. And we're currently still hovering within our buy zone at this stage. Volume, slowly but surely, is raising in this area. And that's a worrying thought because we don't want too much volume here. We want the market to be exhausted. If there's a lot of people still willing to sell, it might mean that this floor drops and we go there. The volume needs to, as this price is going up, kind of needs to be dropping away. So that's something just to take note of. And with that being said, if we then take that information, we look at where Max Payne is. Lee, where is Max Payne currently sitting now? Do you have something for us?
Max Payne is at, it dropped from 40. We were looking at the beginning of the month at 48. Now it's at 42. And
so Max Payne's coming down.
56,000 BTC is going to close at 42 with Max Payne at 42 by tomorrow.
Now, Max Payne basically gets calculated throughout market sentiment. So if Max Payne is coming down, Lee, does that not mean more people are seeing downside and betting downside so that the average of where the losses is coming down? What would you think about that? Or how would you try and verbally explain that figure going down?
Explaining that figure going down, people are actually, sure. Which contract has opened for the Max Payne to go down? Help me here. I need to think about it. I'm a little bit tired here today.
So for me, the main thing is if Max Payne's going down, the only way that I can look at it is we were trading above Max Payne and the market was overexposed in longs. Longs subsequently.
Oh, that was months and months ago. But this month, yes. What could have happened from 48 to 42? Surely there's bigger options that opened with a lower target.
That's true. There will probably be bigger options. There might be a lower targets, or there might be higher targets. At some stage, what the market does do, it gives us the opportunity to actually win a little. So if it's already priced in, the loss is already there. People are taking new positions. People are taking new bets. And if the Max Payne keeps on coming down, that bets might be that they think, okay, so we got punished now, but it's trending down, so let's take a lower bet. It might mean that the shorts might be getting too comfortable now, and we sit in a situation where if price were going back up now, that will be unfavorable to most. And that's kind of what we want to try and do. So now let's pause this whole conversation here. We've now recapped quickly. We said to you guys the FOMC meeting didn't really go well. It's showing us that what they want or what they are going to be doing is instead of printing more money to prop up the economy or raising interest rates, they're not going to raise interest rates to make us feel okay about it. But indirectly, what they're going to do is they're going to be selling off their own stock. Because if you don't print money, how do you pay your bills as a government? They are going to be using that to put money into the economy again. So they're going to use the money that they sell instead of printing new money. So they're trying to slow things down. So if we think about that and we think about how that normally was within the previous Bitcoin bull runs, what we had is when the market was going badly, money would tend to flee away from it. So this can be a big positive for us. If this keeps on playing out, and it does play out as we are anticipating, it might spark a need for money to go find a safe haven. Safe havens like gold, safe havens like Apple, safe havens like Tesla, Windows. These companies have given enormously good returns or reports on their returns. I think Tesla is coming today. And so money might be finding that. And that's where we want to try and look and see if the USDT is actually going, or the US dollar is actually going into those areas to try and find that safe haven. Meaning, if all goes to dust, what do you want to own? I want to own property, or I want to own a business that sells something that people need. That's what I would want to own. I don't want to own funny money or fake money. And that's what we're trying to achieve now. Okay, so Lee, let's quickly look at your Bitcoin prognosis. What do you have for us there?
Bitcoin, yeah.
Maybe start with what can we expect for the next 2 weeks, and then let's zoom real out and let's see what is the big implication for us long term. And after that, let's maybe see if we can look at Ethereum as well.
It's funny because I mean we sound very, very scared and bearish, but for me, for at least for this week, this is really choppy. We had a huge, week from the bottom. The buyers fought it back, and yesterday there were another week, and today we start who is making lower lows. So this range here now from 38 to 32, this is really indecision range. But for me, based on my previous analysis, with that divergence, that bullish divergence, regardless of the news or not, I still see, okay, this is the first wave, like I said before, whether it's wave 1 or wave A. And the best trade for me to look at this chart is maybe to look at a smaller time frame. I'm gonna go to 4 hour. And you can see still that we made higher high, we're coming back, sweep the lows, little imbalance here. If they want to come back here, I am a buyer. I'm still a buyer until they come and stop me out at 32. So for me, on a small time frame, the best entry would be still from this low to this top around 35K. So if they give me the opportunity to buy this at 35, I will still buy at 35. Okay, my target short term won't be that high. I will only go and try to target the previous daily highs, 40, 42, 43, and maybe 44.5.
Lee,
so those
you say you're a buyer, buddy. So are you a buyer right now? Immediately now?
At 36, no, because I mean this is really indecision. I'm expecting if they want to pull it back, capture a little bit more here within this imbalance, within my FIB zone. Now I have exactly my localization that I want between 35 and 34. I can put my stop at 32, and with the profit target at previous daily highs, which is 38 and maybe above 38. But I think 40 will be
I want to interrupt you. I want to interrupt you because I just want to say something, guys. And he's not a buyer right now, and we've got something that helps you with that. You're currently looking at Bitcoin on the 4 hour there. Am I correct?
Yeah.
Okay, so I'm going to add to the stream my chart. Remember, this is the CryptoEMC indicator. And Lee is not a buyer right now because the risk and the reward, everything is not there. And he's explained it to you. The CryptoEMC indicator does the same now by showing you the gamble line value. The gamble line value currently is sitting at 36,400. So it's telling you, if you're entering the market at this stage, even trying to go up or trying to go down, that's the worst time to buy. So your lower target was, let's go back to your chart.
34.
So I'm just going to bring back the indicator just to give you an idea. Can you see that the lower range of where we would imagine things to be is sitting at 34? So you can use this to apply your own strategy to actually help you find your own feet. This is how we envisioned this thing to work. It's not a trade signal. It's purely just a scenario to give you a little bit of gap. Okay, Lee, back to you, buddy. So now
I'm looking at your indicator. You don't need me anymore. Just by the lower range and the upper range.
Because why do I need you? Let's break it. Why do I need you? Because can you see that at this stage? What is the conditions for you to buy this? Because remember now, what do we want to see with this one, this specific one? You want us to see it breaking a long flat resistance or being on top of a long flat support. Once you get these long flat areas, that's currently an area where price should fail, and long flat bottoms. We're not printing that just yet. So it's not really for the newbie an opportunity to grab it because it's all jaggy. And remember, an indicator, guys, I said it many times and I'm going to say it again. It's like driving using your rear view mirror. Please just use it as a guide. You need the rear view mirror, but you use the windscreen most of the time. And that's Lee. Lee, let's use the right hand. He's our windscreen. So we want to see it before it comes. We don't want to be just looking at the rearview mirror, but it's nice to have it. Okay, Lee, so you're back. Your need for CryptoEMC is reinstated. I think you should be okay now. Please continue on, buddy.
So yeah, I mean, previous day low was this area. We lost it this morning. And the weekly low also, we kind of hovering around this. So for me, it's more like they want to check out a little bit more people, create a little bit more fears in a smaller time frame. Okay, people who bought here put a stop loss there. I mean, they should be stopped out. Even the strategy of putting a stop loss on daily previous day low, they are sweeping those lows. And then for me, I'm looking at this chart, man. I'm still bullish. I'm still hoping for 42K target by today or tomorrow. But the weekend can be really, really, really messy because after we're reaching those targets, I mean, that's also another short opportunity. If you reverse the chart, if I am a bear, I'm not gonna short the price from here. I'm gonna short the price. The earliest short I would take maybe 38 because now I can put a stop loss at previous daily high. Or if you go to this range, I would definitely, if I'm a bear, I would definitely take a short because I'm expecting a reaction to the downside there. But on a smaller time frame, when these things wants to come back from 42, if we do reach 42 and they want to come back and kill 32 level over the weekend or next week, then nothing is gonna stop this Bitcoin until until 2028 and even lower.
And that's scary, buddy. That is very scary. So we're gonna have to. Can we at this stage? If anybody did buy at the bottom, is there an area where you can maybe help them place a short? A short stop limit?
Well, stop limit, if you want to be really safe, the safest and to protect your capital is to put the stop on previous day low, which today technically we took profit already on our trade. And yes, the market can still go up. So I will try, like I said, if the market is gonna, what is previous day low? It was at 36.4. If you are stopped out at 36.4, I will still try to buy back at 34, which we, saving, on a smaller trade, you are stopped out, you want to grab it at the lower price. That would be my strategy. If you don't get it, I wouldn't chase the price if it goes higher at 42. Maybe if you are skilled, experienced trader, you can grab those buys on 5-minute charts. But bigger time frame, I don't see any clear direction right now.
Okay, so patience is key, and that's the big thing that we want to do. So let's maybe for anybody that is new, if you're a new viewer, first time on the stream, also just drop us a 777 in the chat so we can just have a look at that. But big picture wise, we need to zoom out as well and just see where we're at in the global scheme of things with Bitcoin. And I also think maybe we need to be looking at other currencies. We maybe need to be looking at the Forex market as well and getting some thoughts there because it's important those things do impact us. So while you're getting your big picture, I'll get the Dixie up and we can look at the 10-year yield bond as well because that's basically the big giveaway. If they're going to want to get rid of it, they're going to start selling their bonds. The 10-year yield's going to get supply. So we're going to have to be looking at that. Okay, Lee, so what do we see Bitcoin big picture now?
Big picture, I'm going to come back to this ALUF count that we did talk about those different counts on the show. So I'm still tracking this, A, B, C, and then I think also on Twitter now people are starting to post this flat pattern correction. And the 100% retrace from that move is still at 36. So we are working this level here. So for me right now, there's not such a big panic, but definitely if we lose that level, like I said, the next level on the fib here, on that extension is 123, which is at 28,000. And that is another confluence with the bottom from March low to the current high at 618. Okay, and you can see that if you lose at 28, which we probably gonna lose 28, if you spend time on this level, or if there's a big sell-off, the next target for me, the end of this move, technically it can go to 123 and 1618, and that is I don't know what you call that number, really scary number for the people out there to look at this number here, but that is a 16,000K BTC. And that will be the best. Like it can do. We can go there, and that will be the most. I mean, the best buy opportunity for BTCs. Really at 16. I mean, I'll be happy to buy. Let's say I'm gonna sell my car again, which I haven't sold last year. I will sell my car definitely at 16K.
Okay, cool. So that's the case. So let's quickly bring up our.
But we are not there yet, guys. We are not there. Don't sell today at 36 and hoping for the 16, because if we hold that level, Bitcoin can bounce from here and then go higher. So the best opportunities now is if you have cash, right? Okay, then buy a little bit here at 36. You can buy a little bit at 28, and your next buy is at 16. But if you are already heavily invested at 38, I'm not gonna sell anything here at 38. I'm hoping for 36 because there is still a probability that we're gonna bounce back here first to this golden zone here, to this 50-something K before we can go still. I mean, after we bounce to 50K or above 50K, we can still come back and visit those lower range. So there's no adjustment. Maybe in March, who knows? That news in March is gonna kill the market, maybe, and then gonna dump in March.
Maybe even May. The sell in May go away, maybe turns around. Sell your USDT in May, and then go away and see how the profit comes in. Okay, so let's then bring this up, the Dixie. So the Dixie is basically the best thing that we can do to see whether we're going to be. We're going to be seeing people spending money, whether they're going to be stabling up. And so at the moment, big picture wise, let's just expand this one. What did I press now? I keep on pressing the wrong button these days. I'm going to expanding this one. The Dixie, historically, what it does is when we have Bitcoin runs, it's the start of the Bitcoin run normally coincides with the DXY dumping. The start of the run we had last year with March, we had the DXY dumping. And any of these runs, when they signify, there's normally a big panic event when the Dixie, there's a flood to dollars. And then wait a minute, I shouldn't have bought back scenario with whales buying the top, using their money to accumulate that. And we can see that with any of these runs, because look at that enormous acceleration and then the big rain down. And that's the same that even happened on the 2013 run, although the scale of Bitcoin was much smaller, but the dollar was showing weakness. Remember, the market cap of Bitcoin at that stage was, I don't even think it was like $500 million, maybe even less. We weren't even in the trillions just yet. So we might have just been touching on the billions. So things about this as well to just keep in consideration about the quantitative easing, the printing of more money into the market. Is when we go into the monthly, what we do see is, and we start charting them in the same way, so we don't try and have an opinion on it. But if I do this and I show you this, you can see how the dollar value over the years of moving. And what we are setting at this stage is we're in a critical area. If we're fighting this resistance, the supply, and we can mark up levels around this easily. You know how the market always moves in the same speed and the same angle. So we're sitting at these areas where price wants to try and figure itself out. But what we're doing is we're creating a large time frame distribution. The markets, if they were going to leave dollar this time around, remember, we've got smart money entering the crypto space. We've seen this now. So when we see that, we're going to be creating a large time frame distribution. With this probably being building the cause, and we're entering into the phase C, the shakeout event. So what they've done is they've laddered themselves in. They're happy. They've bought a floor. And now what they're doing is they are basically getting the weekends out before they start really deploying big money into the crypto, or finding a reason to do that. So for me, that's the theory that I have. And the fact that the way that the Fed is, the FOMC meeting played out, the way that the economic factors point and the fear and the uncertainty out there, this just kind of makes sense that this gets labeled as a distribution, and this is the reason why. It doesn't mean that we can't go high. I mean, we've got targets. There's the ultimate target I have at the moment. And if we go back to the daily, you can see how the DXY is accelerating to that target. So we were expecting this, and we've marked this up long time ago. And looking at this, I probably need to start drawing a little bit better, because I am seeing awful pictures on the screen that might resemble to something we don't want to be associated with. So that's the main just. So let's see where this plays out. And then if we get back to our seismogram at this stage, it shows us that. And if we look at the USDT dominance, we're looking at that. It's still hovering around that level. So this is a positive. Lee says he's bullish. I'm bullish as hell. Why? Because if you look at everything else, they had a big sell-off. Money fled. But money didn't flee Bitcoin. Because if it fled Bitcoin, the tether would have gone up. It stood there. So money was waiting. So we've already maybe taken our punishment. So that just supports to a bullish notion. Do we need to give it time and wait and see? Yes. Sad thing is we have to wait and see. Looking back in the past, there was a strong trend in 2013. Once we went above the 618 on the previous all-time high, the 618 extension. And subsequently what happened then is we rained back down. We created the structure above it, and then we went. And we're still figuring out what we want to do within that structure. So it's not time to be overly scared just yet, but just to have an eye opener, because the market's your friend and the trend lasts until it doesn't. And Lee, that's something that we always say. What if the trend doesn't last? What if we don't get this? You know, I mean, we were looking at this, and to give this in perspective, we've been having a Bitcoin that does this. Crazy.
Well, that's one of the reasons why I'm bullish right now, because we tagged the 100% retrace, and for me this could be the end of that flat. So I'm not gonna try to think about, what if we lose and we're gonna go to next level. Yeah, if we lose that level, the next level is those prices. But for now, I will trade the price action and the trend as we have already touched the bottom, and we need to bounce. And I'm waiting for the bounce, but the next retrace is gonna be important for me. And I see a comment that Joe pushed on the screen, that there's a lot of orders on the 28K and 30K, and Bitcoin will never go to 16. First, I don't like to say never. I mean, the market is just the market. It is as it is. Anything can happen. And usually when you see those big levels of orders, there's two solutions. Either we're never going to go to those levels. We're never going to even visit those 30K or 20K. And those orders are here to scare you. And we're not going to go to this level. Or if we go to this level, then we're going to go through those levels, and we're going to hit harder down. Because those data is public. Everyone can see it.
Best analogy, guys, simple. I own a Ferrari. All of a sudden I say, listen, there's something wrong with the Ferrari, and I advertise it. I'm selling. There's something wrong with Ferrari in general. I'm advertising mine, and I'm selling it for $10,000. That's an order book. Nobody has bought it for $10,000 yet. People will be interested and people will be looking at it, but I can cancel that intention to sell at any stage. And whales do that. They bring large money in. They put orders somewhere down there. And when you use tools like Trading Light that we used to use, you can actually see as price goes there. We used to, when we were young, when we were still trading and we're still figuring it out, saying, they're gobbling up the order. But it's orders being canceled because there's no volume to support that huge order being gobbled up. And that's something that we're going to have to do. So please don't fall victim to looking at these big orders in the order books and saying, yes, there's where the big money is. Because that is not a big money. Big money buys. Big money doesn't say they want to buy. That's advertising, I want to buy. And that's maybe not something that it uses. The intent is to create uncertainty within you. Don't be uncertain on that. We trade our strategy until it doesn't want to do that. Okay, Lee, we've done 34 minutes of talking about fearfulness and not to be fearful. We said worry and then don't worry and so forth. So we might have confused the hell out of you guys, and we do apologize, but the market is a confusing place. So let's maybe take a second and just recap everything so that people can walk away with a clear intent of what it is we're trying to do here. So in short, stock markets or the government is saying they want to sell their own shares. They're not comfortable holding. They need money. They know they can't keep on printing. So they're going to look for money somewhere else. What they're going to do, they're going to sell off their own shares. Similar way as if you own a business and you can't get a loan, what are you going to do? You're going to sell shares in your business. They're selling it to the public. But in the same way, they're saying, if you want to borrow money to buy my share, I'm going to charge you more by giving you a higher interest rate. So it's like a double-edged sword. And they can be, excuse my little, I don't speak English for a living, guys. I do apologize.
They drank too much yesterday. They don't know what to say.
But that's a bad thing in the end of the day because it's going to hurt both ways. Okay. So, and then what we're saying is at the moment, the analysis of Bitcoin is tracking true. The simplest way of visually showing that out is to look at what Lee just did a little bit earlier. I'm going to bring up your chart. Just go to your BTC again. The simplest form of that is that the analysis is still tracking true. We're looking at upside targets. And at this stage, most people will be losing if price goes up. That's a benefit to us. So use that as a resolve. But do not let unnecessary risk sit on the table, meaning look at where you place your stop limit if you're trading and be attentive to the fact that if we go up, that investment-wise, we're going to have to make some decisions once we get there. Because if we get strong rejection at that 50 or 47 or something range and we start making low lows, it's kind of already too late. You should have sold. So thinking about that. And I think that's about that. Lee, anything else that we want to try and do? Or try and share?
Long-term, the market, yeah. Exactly. Long-term, the market is indecision. We don't know. But short-term, I'm bullish. I will still be bullish until I get stopped out at 32. So
10-year yield. Let's bring up the 10-year yield. So this is the 10-year yield, the government bonds yield. Okay, that is how your bond is going to perform. So what do they say? They're saying that they want to get out of bonds. They're saying they want to sell these things. And if you look at what's happening at this stage, this was where there was buying opportunity. This is where there's selling opportunity. So maybe just conspiracy theory me, that's the reason why the bond market has been going up. Because historically, when the stock market goes up, the bond market goes down. They don't run together. If you look at anything, the NASDAQ, you can look at the US 30, the S&P 500. When those go up, historically, the bond goes down. But what we've experienced since March in 2020 is stock market going up, bond market going up, everything is going up. And at this stage, hopefully at least, we're getting to a point where there's some sort of a common sense being priced in. Stock market's punished for it, but the 10-year bond, treasury bond yield, if that starts turning down and things are, it shows us that there's no more new money entering the market. It's kind of balancing itself out. And that then raises the big question, where would you want to then leave your money? In the conventional markets, or you want to bring it over to Bitcoin? I think, Lee, that's our closing thought for the day. Is there any comments or anything? Let's see if there was anything. How do we get the CryptoEMC indicator? Guys, it's very simple. You go onto TradingView and you type in CryptoEMC at indicators. The last time I did it, I actually misspelled my own name. So let's see if I can do it right. There you go. So you're going to type in CryptoEMC.
Haven't we posted a link on our Discord chat as well?
We did. We posted a link on our Twitter feed as well. And we can copy that link and put it in the description of this video as well.
Yeah.
Then the last one. Any good trades? Any good alt trades today? Young Lee, that's a difficult question, buddy. When there's a lot of uncertainty.
Like I said, at the beginning of the week, the best trading days for me in a week, if you are a scalper, is actually yesterday. It was yesterday, Wednesday. You try to build a position Monday, Tuesday. You try to have, the Wednesday is going to give you the direction. And over the past, in this week, Monday, Tuesday, we are bullish. Wednesday, continuation with a big move. And I was hoping to take, profits on Thursday and Friday, but it hit some of my TPs already on Wednesday yesterday. So I do have a small position right now. Not sure if I would like to trade actually today and tomorrow. I will take a trade if they come to to the zone, to the target that I want, I will definitely try a trade today and get out of there or protect this trade as soon as possible. But long term, I give you a trade. I mean, take the previous low and then the closest high, and put your fib level at the golden zone and your stop loss at the bottom. If it works, it will make maybe a 2-to-1 trade. In that case.
Okay, so we said we're going to also be looking at ETH. Lee, we almost didn't do what we said. So I'm going to just bring up Ethereum, and thanks for the reminder. Okay, so when we look at ETH, I think this is where it becomes tricky, because when we look at we were going through coins yesterday, all were showing hidden bullish divergence, meaning a continuation, bouncing to the other side of the trend, coming back down, making lower lows. That can maybe change if price then makes a higher high and there's a big sell-off in the RSI, starts giving us a reason to not do it, but it's not doing this at the end. So my big prognosis for Ethereum at this stage, let's bring that up and zoom out, is as follows. When Bitcoin does that rally, and let's say Bitcoin does go to 50 and we end up making decisions, the idea is that would be within this big trade gap over here. And that's going to be the time where I'm going to be making harsh decisions. I'm not going to be necessarily just holding and hoping. I will be selling. I will be taking some profit on Ethereum there. Because regardless, where did the year open? The year opened at that level. We can always expect a little bit of resistance there. That's the whole idea. Not everybody is supposed to be winning there. And another thing that we want to be looking at, we look at this area. This is a key area where there's always been big bounces. We fell through it and we've gapped it. So if price goes back down, that would probably be the area to test. That would be the range where support gets flipped in, or where resistance gets flipped into support. So to draw it out in a simple way, I've envisioned price trying to do this, getting itself there, coming back down and testing this as a solid foundation, and then moving back up. So that's the goal. So this swing from the high to the low is something that I'm going to want to try and be. I want to be part of the resistance, take profit in that area, so that I can be part of the support and buy if that holds. Because if it doesn't, I've got a very tight area where I can probably use to put a stop limit in. And that's kind of my feeling on Ethereum. Ethereum, Lee, we've got an Adam and Eve pattern also playing out. And I mean, statistically, Adam and Eve are reversal patterns. So the reality is that Adam and Eve can play out, and we can even go down and follow these levels. But I mean, that's now when things are getting really bearish. We're getting ahead of ourselves. So let's ignore that. But just worth pointing out that. Lee, when is ETH 2.0 launching? It's going to become, instead of a proof of work, a proof of stake and everything else. Because there's obviously a lot of ETH locked in there. And that can also be being priced in now. People are understanding. Smart money is saying, hey, it's no use we keep on buying, because we know there's going to be a hell of a lot of supply. So that's something just to keep in mind going forward on the fundamental basis. So I would not be getting into ETH just yet, to be honest with you guys. Looking at where we're at, even although we're in the interest range, for me, that's not a good one. Bitcoin was giving us the right signals and giving us the right tools to at least say, hey, we're on our way. But Ethereum, for me, is not doing that just yet. Then the same prognosis is going to be evident for a lot of them. We went through a lot yesterday. We went through Matic. We went through Phantom. We didn't go, not the same for Phantom, but we went through, there's a whole list of them. I can quickly pull them up. We went from Aave, ADA, Digibyte, Chiliz, Dot, Dash. I mean, the list is there. We went through them and they all did show exactly the same prognosis, which means it just supports the fact that Bitcoin dominance is showing us that it's going up. Attention's on Bitcoin's time. It's time to shine, and maybe it's time to, when we get to these highs, to consolidate your alts, reduce your alt exposure and move into Bitcoin and become a Bitcoin maximalist for a time. We said it many times. When you have an alt season, on the next run, you normally have a Bitcoin season. And then on the run thereafter, you normally have an alt season, because then the alts have accumulated through time. And that might be the case. So it might be. And that's a hard thing, because people tend to get drawn into alts popping because it's insane gains. And then on the next run, they see how they get dropped out of Bitcoin. And then they'd say to themselves, I will be holding Bitcoin, and on the next one, the alt starts popping and you feel like you're foaming. And that's just how the market works. We tend to be reactive in the way we do these things. And we need to be proactive. We need to kind of act. And with that comes risk, because it's then scary. What if I'm wrong? I think that's the last thought for the day. Lee, can we bounce? About time?
Yeah.
But I did a lot of talking today. So tomorrow I'm going to shut up and we're going to listen to Lee. The whole show is going to be planned and built by Lee. And I'm going to be a spectator with you guys. So Lee, thanks for being so patient. And thanks, everybody. You have a lovely day. And chat to you soon. Lee, take it away for us.
Yeah, patience. I think it's safe not to trade today, tomorrow, over the weekend. And let's see what next week is going to bring us. Prediction was good for the week as per me, my concern. So was a good trading week for me. And now we're going to just chill and wait for the market to make a decision. And we'll have a clear direction next week, hopefully.
Awesome. Cheers, everybody. Lee?
Yeah.
Are we going to be bringing in the special, the audience in next week into the backstage?
We can.
Great, guys. So check it out next week. After this stream, now we will be chatting to everybody in the backstage. So looking forward to that.